four stocks that could be relatively immune to Trump's tariff. That's what we're going to be talking about in this video today. So that could be a hedge against potential Trump's tariff going ahead with China, Mexico, Canada, especially with China at this stage, which is the biggest Australian trade partner. So we're going to be looking at possibilities that could not only hedge our portfolio, but also benefit from this. Let's have a look. My name is Les and I'm Chief Analyst of BG Trading Australia. I want to remind you this video is not a financial advice, it's just us from BG Trading sharing with you how we apply BG Trading and BGS20 strategies together with our VIP members to chase 20 to 40% profit based on macroeconomic, fundamental and technical aspect of the particular stock that we are buying. Most of the stocks that we trade are small to mid-sized caps. Sometimes we do trade large caps if we see opportunity to at least achieve 20% into our lead time for that particular trade. Now, the question that we want to be answering in this video is, are there stocks out there that could be immune to Trump's tariff policy? And what are those stocks? How we could potentially trade those stocks and shift some of our positions that could be exposed to Trump's tariffs policy and into those stocks, and whether they are risk positions or there could be a trade for conservative investors as well. So we're going to answer all in this video. Now, I'm going to start this video first with our favorite stock on ASX, Zip. Just a quick overview of Zip. Last week we covered Zip, remember, I covered Zip and Appen in this video. Full disclosure, we are not currently holding Zip or Appen, but we do have a great interest on buying back on those two stocks, right? So if you miss out video last week, I mentioned that I wouldn't be buying Zip yet, even though the quarter report was very positive for Zip. This stock price has crashed, and in my opinion, based on my analysis, I saw that Zip was overvalued around $3. Let's just push the chart really quickly here. So Zip was overvalued around $3. And my major concern was this bearish divergence here, which started a long time ago. It started in September 2024. So there was a little bit of red flag there. But then we have the confirmation and the change of behavior right there. So again, I'm going to be very clear on this. Patience is key to succeed in trading. All right? And I'm not talking about buying stock and have patience to wait for 2 or 3 years to sell the stock at profit. No, majority of the profitability is by entering into a great quality company at technically discounted price. And back in December and January, we had a lot of members asking, why we should buy Zip? We really want to buy Zip. Okay? Every time I look into this chart, something was off for me for the rally, at least for the short term. And I could see this change of trading behavior, the trend behavior going towards the downside, as I said in the last video. And in the last video, Zip was trading at 265. Now it's 223. So it was another almost like 15% fall since the last video. But now what we're going to be looking at right now with Zip is I wanted to see how much has it fallen since the top of this cycle, which was in 5th of December, where Zip has reached about $3.60 intraday. and there was about 35% correction. And now we start looking reasonable for us to start considering taking a position in ZIP. The problem now we have, and that came as with Trump's tariff as well. And I believe that ZIP is not directly related to Trump's tariff policy, but there will be a collateral damage for stocks like ZIP, and I think the market has been priced that in right now as we speak. The collateral damage is the fact that putting tariff in imports and then have this trade war is not good for inflation. If inflation comes back, right, in US or around the world, that only means one thing: potential interest rates hikes again. So, and then that's what I think the market is pricing here. It is actually outpacing the fact that ZIP has been putting really good numbers. The last quarter report was very positive, and I'm actually also expecting the full year report for ZIP to be very positive. But wouldn't surprises me if ZIP falls further on the back of macroeconomic uncertainty related to interest rates. Again, most of this rally here was on the back of interest rate pivoting back in 2024 and the expectation the market had for interest rates hike. As I think ZIP now is trading at its fair value, right? The chart shows me there is still a little bit more to go in order to put ZIP into true technically discounted price, therefore mitigating our risk of a further crash. And even if it crashes, we know where we're buying ZIP as a technically discounted price. For me, again, I would be very happy to be buying ZIP under any price under this long-term moving average, which we use, SMA 250. It's currently trading at 209. It has gone up a little bit since last week. I think last week was 206 as it moves. But then buying under this level would give me a confidence, and at least I'll be more relaxed knowing that owning a company, even for a short-term trade, I'm owning a company that is improving, continues to improve its fundamentals, especially now because they only now take advantage of interest rate cuts that Fed has put on last year. So now taking effect, however, the market has priced that in. So now that's the tricky part. For me, ZIP's getting close, but still not yet. It's not at my buying area yet, which again would be under this level here, right? Okay, that's ZIP. Now Appen again, it went up, which was interesting. Okay, the chart formation is actually looking far better than ZIP, in my opinion. It does currently trade at formal levels, right? And I'm still skeptical about the full year result, which will be released in February, like this month. And I wouldn't be buying until I see this full year results market reaction. Right? The underlying profitability, I mean net losses, the underlying EBITDA is still negative as Appen has lost Google account. Right? Although without Google account, the business has improved. Apart from the hype on AI, still fundamentally, it's not growing on the pace that I would really like to. I don't know, it just feels like Appen is missing a great part of this AI revolution. because we would like to see happen like growing exponentially, and that's not happening. It's still struggling to bring its revenue above of what it was with Google, which was one of the biggest accounts. Now, could Appen cut a deal with another company, like a big tech again, and that could be a profound impact, like positive impact on the stock anytime? Yes, it could, but also could lose another client. I think which is more unlikely to lose a client, but to bring into a new client to the portfolio. Anyway, I will wait for the full year report, market reaction, and then I'll take my decisions to potentially buy in Appen if the stock falls into a technically fair price at least right there. Now that was Appen. Now let's go to the stocks that could be immune to Trump's tariff policy, and why. Mostly important, and why. Now the first one, and this is one of our holdings. We are holding this stock in US, okay, and in Australia. And that has been very profitable for us, which is Mesoblast, okay? And this week, a couple of days ago, I told our VIP members that there was a strong resistance level right there, and it was very likely to see a retracement because the stock has rallied quite substantially, right? Now, some of our members had the opportunity to lock in 24% profit in today's stock. Still have a target above that, but they had the opportunity to lock in 24% profit because we bought at 255 a couple of weeks ago. So it was a quick trade, and for those who want to lock in good money. But overall, Mesoblast has a lot of things on the pipeline for this year. Okay, not just the commercialization of Remestemcel, but also potentially applying for another FDA approval, which could lead for the next rally, right? For me, this is a long-term position now, all right? And the targets are not actually numbers, but it actually key events. That's what it would be. Now, the key events for me with Mesoblast in terms of target is, okay, when is Mesoblast will start commercialization and see what the price will be at. That's what we're looking at. And also whether going to be another BLA, biological license application with FDA, and the impact that will have on the stock. Obviously the chart formation is very bullish, and it doesn't concern me at all at the moment, based on this all these fundamental key metrics that we are looking at. Obviously, it is still a speculative stock, but it's shifting from completely speculative into a more like a higher quality company in our opinion. Okay, now according to my analysis, and I had actually put together here, I'm gonna read a little bit for you guys, but the company, the headquarters is in Australia and conduct clinical trials in business activity in various countries, including in US, and is listed in US market. Okay, given that Mesoblast products are not typically subject to tariffs, okay, because it's a biologic and medical product, and considering the nature of the industry, it is less likely to be directly affected by Trump's tariffs targeting goods imported from China. So it's pretty much immune, in our opinion, based on that. So the structure of the business and the product and where it's commercialized, where it's going to be produced, it should not be impacted. And if you have any information that contradicts what I'm saying here, please put in the comments. We are more than likely to look into one by one aspects and obviously reformulate the analysis based on any new input of information, right? It's very important, and we take this very seriously, right? Now, the second one we believe is immune to Trump's policy is Lynas Rare Earth, right? And also works as diversification from tech stocks and from any stocks that are potentially benefiting from interest rates cut. This is a mining company. It's a profitable mining company. Now, the reason that it is immune, at least now, immune from Trump's policy, is because Lynas has been working to establish a processing facility in the US to reduce the dependency in China's rare earth. So it has contract with US and US companies, and since China's supply chain is primarily outside of China, that should not affect, and its efforts is aligned with US interest to have domestic rare earth supplies or supplies outside of China. The company is less likely to be adversely affected by US tariffs on Chinese imports. For now, I think this could be a good diversification, and also Lynas is it's the top end, the high quality rare earth producer. So if you're looking for exposure to rare earth stock on ASX and the highest quality rare earth stock, this is the one, Lynas, right? At the moment, it's trading a technically discounted price, offering a very interesting opportunity right there. So I'll let you make the decision. Once again, our analysis is based on information that we have. If you have any information that contradicts what we are saying, put it in the comments below. We're more than happy to discuss further in depth. Now, the third one, it's a coal mine. Again, Whitehaven, which the ASX code is WHC. This is a stock that we have been trading in the past. And the chart formation is looking very interesting. It has bounced once again from this multi-year support level right there around $6.580. So between $5.80 $6. It's actually reached $5.87 intraday, but then bounced back. So very interesting. In our opinion, the RSI start looking constructive as well in the short term, which leads to a little bit more confidence right there. As you can see, obviously this is only from December till now. We're talking about 2 months, but it start looking positive and trading a technically discounted price, high quality coal mine. Now, why I like this stock so much at the moment? Not only because it's a great dividend payer with yields around 10% annually, but also because independently from Donald Trump's tariff policy, this company mainly exports to markets like Japan, South Korea, and Taiwan. Therefore, making it immune to Trump's, at least initially, this Trump's tariff to China, Mexico, and Canada. Even though Trump has delayed this. But another thing that I really like is the fact that Trump is out of a French agreement for net emissions, zero net emissions till 2050, and that is something positive, regardless if it's negative for the world or whatever. I'm not going to in politics detail, but this is positive for this type of company, as we might see more investment into coal, and therefore encouraging countries to start using coal again, and therefore we could see coal prices going up again as demand could potentially increase. So for the macroeconomic outlook and the fact that those stocks are trading, coal stocks especially, Whitehaven is trading at technically discounted price, I think it's not much a brainer to pick up a very high quality company at technically discounted price. Only thing you need to watch is obviously the coal prices has to stay at least where it is at the moment, and this hypothetical multi-year support level right there, we want to make sure this stock holds above this support, which in my opinion looks like will. You just gotta be obviously taking position while it's slow, not after a potential rally. I think this is a good opportunity. Again, this is not a financial advice. You have to do your own due diligence, do your own research. But I think this is a great opportunity to take a piece on Whitehaven at the current price for the reason I've just came up with. Now, the other one I like is Novonix, NVX. Novonix is a very volatile stock. It's also listed on NASDAQ and has been obviously a stock, and it has been a stock that and has been targeted by short traders as well as long traders, but majority of those huge movements are short trading coverage activity, right? Not just people buying, but also artificially, short traders are artificially buying back the stock because there are some good fundamental inputs on that particular stock. Now, why I like Novonix? Because first of all, it is a company which is based in Australia and in US. And they are going to be producing synthetic graphite in 2025. This year, the production is supposed to start in Riverside in the second half of this year. Now we're in February already, time flies. So we want to be positioned to take advantage of that. But also, it should be immune to Trump's tariffs policy for the simple reason that it is... like in 2024, in May 2024, Novonix was announced that the US government would reinstate Section 301 imports tariff on artificial graphite from China, right? And because Novonix is not a material company that produces in China, it's a unique proposition outside of China and in the US. This move could directly benefit Novonix by making its US produce graphite, like synthetic graphite, more competitive than Chinese imports, and therefore directly benefiting Novonix. This is the key thing for Novonix, and that's why I like. This is a high risk stock because the fundamentals are very weak. It is a growth company, only going to start producing the second half of this year, but the macroeconomic outlook based on Trump administration directly benefits this particular stock, and we haven't seen the excitement right there yet, but I think we could, and would it be fantastic to see this stock moving towards $1 and even beyond. Now, according to the chart formation, it is trading a very interesting entry price, as you can see here, a technically discounted price, not only for the long term, but also for the short term. The RSI shows a relatively positive ascendant confirmation over this long-term sideways movement. The trend is down at the moment still, because it's trading on the bearish side of the long-term moving average, but equally, as macroeconomic outlook becomes favorable for Novonix, and you all know the importance of the macroeconomic compound within any particular sector or any particular stock. For me, this is a buy opportunity right now while everyone is scared, right? For the reason I've just mentioned. So that's Novonix, our last stock that could be immune to Trump's tariff. Again, like any other stocks, if you have any information that contradicts what I have just said, put it in the comments below. More than happy to open a discussion. Meanwhile, I hope this video was valuable for you, and I hope if you take position in any of those stocks based on your research as well, because we're not advising you to buy, I'm just saying that for me it is a buy. Hope to make well out of those positions. Let us know what you think, and I'll see you in the next video. Bye.